For Bitcoin fell more than 4% to trade around 47,400 US dollars on Monday, having fallen to as low as 41,968 US dollars on Saturday. And the updates on commodities for gold steady amid subdued yields, tightening bets. Gold steadied around 1,780 US dollars an ounce on Monday as investors weighed expectations of a faster pace of policy tightening by the Federal Reserve against subdued US bond yields. Benchmark US 10-year yield fell to as low as 1.33% on Friday amid a widespread risk-off sentiment in the markets, driving investors to dump high valuation growth stocks in favor of safe haven assets such as U.S. Treasuries. For crude oil rises on Saudi price high. WTI crude futures rose more than 2% to above 67.5 US dollars per barrel on Monday. For Brent climbs above 71 US dollars. Brent crude futures rose about 2% to above 71 US dollars per barrel on Monday after top exporter Saudi Arabia raised prices of its Asia and US bound crude, and as indirect US-Iran talks on reviving a nuclear deal appeared to have stalled. State oil producer Saudi Aramco raised official selling prices for all crude grades sold to key markets, Asia and US, for a second straight month in January, the company announced on Sunday. Here are the updates on stock market. In US futures rise after recent tech rout. US stock futures rose on Monday after investors ditched tech stocks last week amid concerns over the new Omicron variant and a firm hawkish pivot by the Federal Reserve. Dow Jones futures gained 0.6%, while S&P 500 and Nasdaq 100 futures edged up 0.5% and 0.15% respectively. The richly valued consumer cyclical, communication services, healthcare, and technology sectors were the relative underperformers last week, each dropping more than 2% week over week. DocuSign shares led the tech losses on Friday, falling 42.22% after the e-signature software provided weak Q4 guidance. Other big decliners among growth names were Tesla with 6.42%, Nvidia with 4.46% losses, AMD with 4.43% losses, Alibaba 8.24%, and Adobe 8.24% losses. Meanwhile, the IMF urged the Fed on Friday to tighten monetary policy at a faster pace in light of rising inflation risks, citing the U.S. strong economic position compared with other developed countries. Elsewhere, the Omicron variant has now been detected in at least 15 states, CDC said on Sunday. In Japan, Japanese shares tumble as SoftBank drags. The Nikkei 225 index fell 0.36% to close at 27,927, while the broader Topix index lost 0.53% to 1,948 on Monday, as SoftBank Group dragged the Japanese market down on squeezed valuation of its underlying investments. The tech investing giant declined for a seventh consecutive session by another 8.2% amid falling share prices of key holding companies including Alibaba, Didi, and Grab, and regulatory opposition to the sale of chip designer ARM to NVIDIA. Other market loggers were Lasertec Corporation with 2.6%, Hitachi 2.13% losses, Sumco Corporation 5.17% losses, Monex Group 7.53%, Daiichi Sankyo 6.17%, Z Holdings 2.65% losses, GRCS Incorporated 6.78%, and Baker Consulting 5.95% losses. Japanese growth names have also been reeling from expectations of higher US interest rates and uncertainties around the new Omicron variant. In Australia, Australian shares inch up ahead of RBA decision. The S&P or Australian Exchange 200 Index recouped early losses to close 0.05% higher at 7,245 on Monday, as Australian shares were buoyed by upbeat comments from Treasurer Josh Frydenberg on the economic prospects for 2022, while investors await monetary policy decision from the Reserve Bank of Australia. The RBA is widely expected to keep the cash rate on hold at a record low 0.10% on Tuesday. Gold miners and energy firms led a market higher amid a jump in their underlying commodity prices, with notable gains from Santos Ltd 1.42%, Newcrest Mining 1.54%, Woodside Petroleum 0.84%, and Northern Star Resources 3.18%. Meanwhile, technology stocks suffered steep losses amid expectations of higher U.S. interest rates, led by declines from Afterpay 4.32%, Zip Company 10.14%, and Zero Ltd 1.79%. Heavyweight iron ore miners and lithium explorers also slumped with losses from BHP Group 1.59%. Pilbara Minerals with 4.08% losses and Liontown Resources with 6.73% losses. In New Zealand stocks drop on Monday. The New Zealand Exchange 50 Index fell 0.62% to close at 12,598 on Monday as New Zealand stocks continued to reel from uncertainties around the Omicron variant and its economic risks, as well as on expectations of higher interest rates. New Zealand's yield curve has flattened markedly, signaling that the central bank's tightening cycle is expected to significantly slow economic growth. The Reserve Bank of New Zealand previously raised its official cash rate to 0.75% and signaled it will need to raise the benchmark more quickly than previously expected to contain inflation, taking it to 2.5% over the next 2 years, while projecting annual growth to slow to 1.3% in 2023 from 4% in 2022. Top market laggards include Genesis Energy with 4.22%, Meridian Energy 3.57%, Infratil 2.93%, Sky Network 1.13%, and Kathmandu 1.35% losses. In China stocks steady despite tech Evergrande woes. The Shanghai Composite Index gained 0.3% towards 3,620, while the Shenzhen Component Index rose 0.1% to 14,910 on Monday, as mainland stocks remained relatively stable despite a sell-off in Chinese tech giants and Evergrande shares over at the Hong Kong Exchange. In Italy, the FTSE MIB rebounded 1.1% to trade at the 26,200 level on Monday, in line with its European peers, supported by the energy and financial sectors. Despite heightened volatility in European equities brought by the pandemic jitters, investor sentiment in the Italian economy was slightly uplifted by a ratings upgrade on the country's sovereign credit from Fitch, citing confidence in the economy's future from use of the EU's post-pandemic recovery fund. On the corporate front, banks led the gains, driven by Banco BPM 2.4%, Banca Generali 2.3%, and BPER Banca 2.1%. On the other hand, Telecom Italia fell 3.1% as investors await the list of banks to advise the Telecom of KKR's 33 billion euro buyout offer. For the trivia, did you know that apart from stocks and commodities, there is a pirate exchange as well? The world's first pirate stock exchange was established in 2009 in Harargeir in Somalia. The exchange is open round the clock and allows investors to profit from ransoms collected. There is no authentic report available on the operations, but sources mention that over 70 entities are listed on the exchange.